Okay, I'm Ron here. I'm with,
Dallon Brown.
that's right, with Evergreen Home Loans, right?
Yeah.
Okay. So today's going to be fun. What we're going to do is we're going to make a video on anything with lending, any questions, anything that my buyers may have for lenders. But what we'll do is we'll start basic with this video. So, first of all, let's introduce yourself.
Yeah, so I'm Dallon Brown with Evergreen Home Loans. I've been in the mortgage business for it's a little over 26 years. With Evergreen Home Loans for more than 10 years. It's just a phenomenal place to work. I often say if I had found them earlier in my career, I'd have never worked anywhere else. It's just been a great place to work.
Oh, good. And just so you know, reference-wise, Dallon actually has done our home loans as well. So I personally have used Dallon for lending. So,
Right.
And I have hundreds, I can literally say hundreds of clients I've sent to Dallon that have used you for lending.
Yeah. We've been a great team over the years, and it's just really great to have someone that you can trust.
Oh my
that you
goodness.
can refer your clients to, know that they're going to receive that great treatment that you give them yourself, and
Correct.
and just have that kind of relationship where people know we care about them and are just trying to help them fulfill their goals and dreams of home ownership.
Oh, absolutely. And you got to remember, local from here, you can actually come see Dallon. You come to his nice office. He has an amazing office there. And you know what you're getting. I think that's the key is straightforward. It's honest. There's no kind of games. There's no corporate anything.
Right.
It's here you are. You get Dallon. And when I've used him personally, I loved him. Everything was amazing.
Well, we just we're not a bank/mortgage company, so we do one thing, and that's mortgages.
Correct.
And our goal is to just do it right. And it can be a stressful experience for a lot of people.
Yeah.
And the idea is to take that stress out, to answer people's questions and to kind of give them that just information and guidance that just takes the stress out of the process.
Yeah.
So from start to finish, we just try to make sure that they feel comfortable understanding everything that's going to happen.
Correct.
Know what pitfalls maybe they could face, so nothing surprises them as well, and then just guide them through the process, until you're handing them over the keys. You get the fun job of
I do.
Being able to give them the keys. I've always envied that job.
I really do get the easy job when it's the keys, yes.
Right.
And I will say my wife, same thing. When she had to do all the paperwork, she was pulling her hair out. Yeah. But at the end of the day, the product we got, the home we got,
right,
it was unbelievable.
Right.
And she's always reflective of like, yeah, it was painful, but now look at us. And it was amazing. And it wasn't anything down. It's just, hey, I need this form. I need this mortgage statement. I need tax, this and that. And it's digging those up. And my wife's like, okay, let's do it. So it wasn't crazy. So let's segue into that. Let's do this basic. If I have a new buyer, and I send the buyer to you, what's the first steps for a new buyer?
Very first steps is just that conversation. Just trying to find out what it is that they want.
Yep.
What it is that they need, what their goal for themselves as an individual or family or whatever their situation is. And I often just do kind of what I call a paper and pen, kind of pre-qual.
Just scratch it down.
Yeah. Just let's, people are sometimes a little bit anxious about somebody pulling my credit and that hurt their credit scores.
Absolutely.
And not sure what they can do. And if they have an idea, say for example what their credit looks like, they have an idea, of course, what their income looks like, and an idea what their debts look like. So we just kind of scratch that down oftentimes on paper.
You're able to take all that and kind of give them a ballpark of where they're at.
And oftentimes that just brings a sense of relief, like, oh, hey,
yeah,
this is a workable situation. I can make this work, or answers a lot of their questions or concerns just right up front. And then they're more comfortable, like, okay, let's go ahead and complete an application and have the credit report pulled and all that kind of thing. And even at that point, if they're like not quite ready to move forward with a full pre-approval, we can do what's called a soft pull on the credit report. And that is where you pull a credit report, but it's just one bureau. There's 3 bureaus typically pulled on a credit report for a mortgage company. And we just pull the one, and then it doesn't hit as what's called a hard inquiry or something that impacts their credit score.
So soft is just a few point kind of thing on the credit.
Yeah.
Okay.
Well, it doesn't hit them on the points at all.
Oh, it doesn't?
Doesn't impact their points, so that's really nice. But it does give us a picture of their debts. It does give us one credit score, so at least we have an idea of what we're
up against.
Yeah.
Gotcha.
So we do that.
But I like in the beginning you don't pull credit, because I think a lot of buyers get nervous about having their credit pulled, and I don't want my credit pulled either.
Yeah.
I hate that.
Exactly. Now, if they're anxious, they know what they've got. Every client's a little bit different, but if they know, hey, we're ready to go, we want to make an offer this weekend or whatever, boy, we just jump right in and
do the application.
and get it done. Full application, full credit report.
How long does the application take then?
Oh, for an individual to fill out an application, 15 to 20 minutes.
So 15 to 20 minutes
Really,
for an application.
on the outside.
So no one should say it should take days to get pre-approved.
No. And I guess depending on your situation, if you're self-employed, we need tax returns and that kind of thing. If you have a corporation, you need corporate returns and those kinds of things. But if you're just kind of working, you're a W-2 employee.
At Amazon or something like that.
It's so simple.
Gotcha.
30 days of pay stubs. A year or two worth of W-2s.
But that's not hard. Everybody has that in their file, or should have there. I shouldn't
Right.
say hard.
Most people now, you can come up with that online.
Correct.
Your pay stubs are with your company's
and your W-2s online
website,
and everything.
all that stuff. So it's actually become a lot more simple. In fact, even since we did your loan, a lot simpler. Yeah.
So that's the catch: is call Dallon, paper to pen. There we go, or pen to paper. Sorry, pen to paper. We get to know what you want. If you don't want credit pulled, great. Soft pull if you want it, just to check what you're doing. And if you do want an application, 15 to 20 minutes, and that's it.
And frankly, after that, depending on the situation, I mean, half an hour, I can have what's called an automated approval.
Good. Okay.
Yeah.
So then that pre-approval, what is that? So everybody doesn't know as a buyer.
Yeah, so that pre-approval, that basic pre-approval, that means I get to write a letter and send it to you and send it to them saying, hey, these folks are pre-approved. I've seen their income. I know what their assets look like. I know what their debts look like.
Okay.
I know what their job situation is and all those kinds of things.
So that pre-approval, you got to understand, I cannot write an offer without a pre-approval.
Right.
No listing agent's going to accept an offer without the pre-approval, seeing that you can actually buy the home. So I need that, and I will always require that to go look at homes. And I say it with a caveat, 2-3%. I may run around, show you a home or two to kind of get you going, but I need to see that pre-approval. I need to make sure we can buy.
Right, exactly. And you can't present an offer without one.
No.
There's no listing agent that's going to accept an offer.
Well, and then no one wants to know what we can buy. If you
Yeah.
can't get pre-approved, you may get pre-approved for way more than you think, and that may open up a lot more doors of looking at homes as well.
Exactly. Right. And it gives you peace of mind.
Oh, yeah.
To just know, hey, this is what I'm able to do. And when I do a pre-approval, I typically do a max amount pre-approval. So if you say you want to, look at houses in this price range, I'm going to go ahead and pre-approve you for the most you can buy, not to encourage people to overspend, but just so they know what
where they're
able
at.
to do. You
Yeah.
know, and sometimes too that just gives a pound in the
Oh,
microphone.
no, you're fine.
It just gives them a comfortable feeling, like,
Yeah.
oh, hey, I'm actually in really, really good shape here.
Well, and that's the point, because and I've heard that before a lot of times. You will pre-approve them. Client says, hey, I'm pre-approved to 800, but I only want to go to 700.
Right.
Great. But then we find a home, and they actually find a home for 750. They're like, well, we can. Here, we want to do the 750 home. Or, sometimes it's 600, still pre-approved 800. That's fine. Let's go find the home that's right for you with the pre-approval letter.
Exactly.
Okay, so would they get pre-approved? We know the next steps as buyers, because I made this video. We go find a home, we write an offer, we submit the offer with the pre-approval letter.
Right.
What happens on the lending side for the buyers after that?
Yeah, so the flow from there, we collect the information like we were talking about, the 30 days of pay stubs typically if you're a W-2 employee. 1 year, maybe 2 years of W-2s depending on your situation and things like that, and 2 months of bank statements. Those are kind of the basic stuff. When you get your offer accepted, maybe you've set up an inspection and that kind of thing. We'll order an appraisal as soon as someone's ready to do that. We'll sometimes wait if they're concerned about the inspection.
And I made that on my video too.
Yeah,
I
we'll
said
wait
that depending on
to
timing
order that
for
appraisal. If we're in a tight, time frame or whatever, and we're really good, as you know, at closing really quickly, then we may order that appraisal.
Correct. And like I said in the last video, we could always cancel if something goes crazy during the inspection before the appraiser gets out there. Typical price, because I always get that question too. On appraisals, the buyer pays it, right?
Yeah.
Okay, the buyer pays the appraisal.
So the buyer pays for the appraisal up front. They don't have to order that appraisal.
Okay.
Sometimes people get confused. Like, you do order an inspection, that's on your own.
Yep.
We don't need to see that inspection. In most cases,
as a lender,
we don't need to see it. That's for your information only.
And I will make sure we talk about that before you start.
Right. Yeah. We don't.
Not we're trying to hide anything.
No, but there's just no sense, and
send it to the lender.
Exactly.
So then we do the inspection. The appraisal's ordered. You order the appraisal.
Right, and that appraisal happens independent of the buyers don't have to do a thing.
Okay.
They don't have to be there when the appraiser comes, and the appraiser does that. As soon as we get that appraisal back, I always send that appraisal, as you know, to you and to the buyers right away, so they know.
So we
this is
know
what
where
we've got. Hey, good. We've got this. We've got some maybe instant equity and appraised for higher even than we're agreed upon.
And then the appraisals range from like what, 600, 800,000,
Oh.
1,200 price range for the buyers for the
Oh,
appraisal?
yeah.
1,500?
Yeah.
Does
Well,
it depend on the home?
it does, and like if it's super rural, if there's
Okay.
something unique about it, if it's a duplex or a fourplex or something like that,
Depending how
it's more
much work they
expensive.
have to do the reports.
If it's a non-owner occupied home, if it's going to be an investment property, it's a little bit
no
more
kidding.
expensive sometimes because
Okay.
they do rent schedules with it as
Gotcha.
well, so they charge a little bit for that. Waterfront, oftentimes will be a
Really?
little bit more expensive.
Interesting.
Things like that. Anything that the appraiser, if the comps are going to be difficult,
Uh-huh.
if it's going to be more labor intensive, it can be a little bit more expensive. Not when I say a little bit more expensive, I don't mean like going from $600-700 to $1,200 instantly, but maybe you pay $800 or $900.
Oh, so only $100, $200 more. Okay.
Something like that.
Now, can they write that appraisal fee in the loan, or do they have to
It's
pay
part
for
of
it?
your closing costs, and most lenders, we ourselves included, ask for that appraisal to be paid up front.
Okay.
So when we order it without the money, but without it being paid up front. But then they're going to ask for that payment before it's done.
Gotcha. Okay. So they can do that with closing costs, or they have to pay for it, but
well,
then it can be rolled in
They
closing.
can pay for it up front, but then get credited back for it. Like if the seller, for example, is paying the closing costs.
Yeah, we just did
Right,
that in the duplex.
And
Yeah.
we just credit that appraisal back to our borrower, and then the actual cost of it goes back to the seller.
Correct. And so the seller technically
Yes,
paid
exactly.
for the appraisal.
They do, yeah.
Yeah.
You pay for it up front, but you get reimbursed for it. So.
Cool. And see, now they're going to ask, okay, what's closing cost? Explain closing,
yeah,
because
yeah,
this is
so-
a typical one, which I
Yeah.
may cut this video down the road and say, this is just what closing costs are. Buy Dallon Brown, because this will be great.
Well, there's closing costs for every lender are virtually the same in the sense of, everybody pays for an appraisal, say for
Yes.
example,
Yeah.
title insurance. There's an escrow fee or what's called a settlement fee, those kinds of things. There's a
From the title company.
Right,
Yeah.
right. Most fees, frankly, are third-party fees. They're that
From the
appraiser,
escrow
the
company.
title, and the escrow, and
Okay.
and gosh, the tax service fee, and the flood certification fee, and the credit report fee.
No kidding.
The county recording fee. You know what I mean?
So it's all just government fees almost.
I ain't trying to be but
Okay.
It's a lot of stuff. It seems
Just to get the loan, you have
Yeah.
all these fees.
and
to
all
go
those
through.
fees, like inflation, have gone up.
Yeah.
From the time I first got in the business, when appraisals rather were maybe $200.
Isn't that crazy?
Like that to be $700-800 now or whatever. Yeah, but that's just that's inflation.
But that's part
how
of the
it works.
loan. You got to remember the big picture is it's
Right.
not adding the fees up. Closing costs. Oh, okay, sorry. And then what are closing costs? So
So yeah, then as part of the closing costs, there's things called prepaid items. And
Okay.
like if you're including your taxes and your mortgage, your hazard or homeowner's insurance
Okay.
with the loan,
Yep.
that's part of your closing costs too. They'll typically collect 5 to 6 months worth of your property taxes.
Okay.
They'll collect a full year's worth of your homeowner's insurance, what we call hazard insurance, and then a couple of months in reserves for each of those.
Okay.
And then there's what's called prepaid interest.
Okay.
So a mortgage payment is paid in arrears. So that payment that you make pays for the interest from the prior month.
Gotcha.
And when you close on a mortgage, say we close in December, you skip the following month. So we would
So they get
skip
1
in
month
January,
off.
right?
Yep.
So that mortgage interest has got to be paid somewhere,
Yep.
because you aren't making that payment in January. So they have prepaid interest. So if you close on the 15th of the month, you'll pay 15 days of prepaid interest.
Gotcha.
As part of your closing costs.
And
as
what's
well.
nice though is when you close on a home, you don't have to pay for 1 month. Is that correct?
Yeah, you skip a month after
Yeah.
you close.
So
Yeah.
you close on your home and you skip one payment technically,
Yeah.
and then the next month is your mortgage payment.
Exactly. Yeah.
And so the closing cost is when we come as a buyer's agent and we're buying, negotiating with the seller, I usually ask for $10,000-15,000 closing costs. An average is, 8 to 10,000, sometimes 12,000 closing costs with inflation. Now it's higher.
Right.
I remember doing that
Yeah.
lower with you back in the day.
Yeah,
but
remember we were $5,000-8,000.
I know.
That was going to be great,
So
Yeah.
now, you're at 10, 12,000, maybe 15,000 closing costs. But that closing cost, we're asking the seller to pay all those fees for you to get the loan with
Right.
Dallon.
And in the market that we're in now, this is really feasible.
Oh, it is.
Just
completely.
a few years ago, that you could forget about asking
No,
the seller to
not
pay
at
closing
all.
costs. You were going to have
But
to pay
right
more.
now,
Right.
I can get you closing costs for every loan.
Yeah.
I mean, I shouldn't say every, 99%,
It's a great reason,
95.
frankly, isn't it?
Oh,
to
yeah.
buy right now.
Oh, yeah.
Because
I get
the
everything.
buyer's in the driver's seat more than ever before.
Oh, it's a buyer's market.
Yeah.
So I can go to the sellers and say, hey, we need closing costs to pay for your loan fees. So that way, when you go and sign the paperwork, they don't have to pay anything.
Exactly.
Or that's the goal anyways.
Right.
Just
right.
not to pay anything.
Yeah, and if we have down payment assistance loans as well, as you know.
So what is that?
Going
Sorry.
So one of those is Washington State Housing Finance Commission.
Okay.
So a lot of people still have the idea that, boy, I've got to have 20% down or something like that. I'll never be able to save that.
Not at all, by the way.
Not 10%, not 5%. Not even 3%. I mean, 3% is the minimum down payment for a conventional loan.
Okay.
3.5% for an FHA loan. VA loans are 0 down, and USDA loans are 0 down. But with down payment assistance loans, you can use a down payment assistance loan in conjunction with your conventional loan.
So that's from Washington State.
Right, Washington State Housing Finance Commission.
And how do you qualify for that?
It's like you'd qualify for anything else. Basically, if you qualify for this loan, the conventional loan or the FHA loan, which is a government subsidized loan,
so even if I just qualify for a loan with 3% down,
then you can get that down payment assistance.
And then how much does that cover? Or does that cover the whole percentage?
That's a great question. So it does. It covers the whole down payment. So let's just say we were using a conventional loan with 3% down.
Okay.
They do, they have varying things, but I most often do 4% of the loan amount.
Okay.
So 4% of the loan amount is higher than 3% of the down payment.
Yep.
So you get to use that difference to go towards closing costs.
Okay. And what else could it go towards? Just
that's
to
it.
a closing cost.
Yeah. So
Okay.
it can't be any
So in
cashback
case the
type of
seller
thing.
doesn't pay for the closing cost, we have the down payment assistance to cover it.
Right. Well, it doesn't cover the whole closing cost. It'll be enough to help a little bit.
Okay.
So that means you ask the seller for less.
Okay, which is nice. So if we only get $5,000 for closing costs, we can get some.
Exactly.
Now, someone's going to say, well, what does that mean though? So if I get Washington State assistance to cover my down payment, I still have to pay that though, right, through the loan?
Actually, yes, but here's how it works. It's a zero interest second mortgage is what it is.
Zero interest.
With no payment at all.
Okay.
So let's just say it's a down payment assistance loan for $20,000. That $20,000 just sits there, and let's say your first mortgage is $400,000, So you really owe $420,000, but your mortgage payment is based on $400,000, just the first mortgage.
Okay.
And $20,000 is just sitting there.
Okay.
Secondary, No interest is being accrued, no payment is being made. It's just literally just sitting there. Now, when you go to refinance or you go to sell your home, or otherwise, let's say 30 years down the road, you go to pay, you've made your last payment, you still owe that $20,000. So it's technically a balloon payment, but it's a 30-year.
But it's been sitting there with zero interest, zero payment.
Yeah, not costing you a thing.
But it helps you to pay down and buy a home.
It helps you get into that home. And I think about this all the time, Ron, like, people will say to you, oh, boy, I want to wait. I want to wait till I save enough for a down payment or whatever. Well, what are houses appreciating around here?
It's crazy.
5.7%
5
year
to
over
10
year,
even.
right?
I mean,
even in this market where things are softer.
Even in this market, I'm at 4 to 7%.
Yeah.
I mean, that's the crazy part. At 4 to 7%, we're increasing in value, and it's going to go up. I know for a fact.
And the median home price is what, $550 around here, and way higher in King County and
So
Pierce
you can
County
get a
and things
home
like
for
that.
about a good home for $550. We can find some stuff around $500 in city, outside the country, $500, $450, higher up.
Yeah.
I mean, Olympia School District, $650, $700.
Yeah.
It depends on where you're wanting to buy, but the median price is around $550 right now for a good home in Olympia.
Exactly. So if you take, say, you say, boy, I want to save, until I have X percent, 5% or whatever, and your homes are appreciating by 5, 10%. And that's going to just increase, frankly, when interest rates come down. Or I want to wait until interest rates.
Well,
come
we
down.
have no inventory. I mean,
Can you save? Let's say what's 5% of $500,000, $600,000, $30,000 a year.
Correct.
Towards that down payment. Well, in the meantime, if you don't, that house is appreciating $30,000. So that's a race you can't win. So we always tell people, listen, this is the time to buy. It just is.
I just literally made this video of you need to buy now. So and then you have no excuse. So now you call Dallon. They have the Washington State down payment assistance.
Right.
Plus what you have. So you've already qualified for the loan. We get you closing costs from the sellers. As of right now, we get the down payment assistance if you want, a 0% interest that just sits there with no payments. And you have a home. Now you're increasing that home 4 to 6%, worst case 3% per year. And it just keeps going up from there.
That is really how generational wealth is built.
Correct.
By just getting in and owning a home. And then if you want, we help you buy your next one.
Yep.
We'll help you keep your existing home. Here's the crazy thing. That down payment assistance loan thing, oftentimes people just feel like, oh, that's only for first-time home buyers. It's designed for first-time home buyers. But you can refinance out of that loan and use that down
use
payment
it again.
assistance loan to buy your next one and keep that home and turn it into a rental.
No kidding.
You can do that half a dozen times and own, you know.
But that's the whole point. Is now you're starting to build
And
that
that's
wealth
how
of
wealth
rentals.
is. Yes. The average Joe, you know, not don't even have to be an overly high earner.
Yep.
You know, just the average person.
Yep.
Can create really an amazing real estate portfolio if they
just buy. I mean, and here's the deal. You buy one home, we do it again. You keep rolling it over, refinance, make it a rental. Guess what? Now you have 2 kids. There's your 2 kids' homes. You bought one, you go next one, you buy another one, you go next one.
Right.
Now you have 2 kids plus your primary, you keep doing it, and now you're able to give your kids homes. Those are your retirement. I mean, if you want to give your kids the homes, but at least remember, they're not going to be, your kids are not going to be able to afford a home in 15, 20 years. That's what they're saying.
It's really a tough thing for our young people. It's different than when I was young, for sure.
Yeah, so you do it now. You buy it and you do the programs. All right, so back on to, so we've gone through everything with the programs. We've gone through the appraisal. We move to basically closing, or what's the next steps coming up to closing?
So there's going to be a period of time when you're like, what's happening?
Yep.
You know?
Yeah.
And we're just waiting for that close date, or waiting to have the loan processed or underwritten or whatever. And by the way, those are things that we communicate with you throughout that process. Our processor will look at that loan, and maybe they ask for something that we haven't submitted already. We'll do that. Then the underwriter will review that loan, and maybe they ask for something that we haven't caught or haven't submitted yet. So we do that. You know, so we just kind of, you know.
And I see the emails and the updates, and you have a checklist. There's a whole checklist.
Now the appraisal's in, and now this is done, and now we're just waiting, you know. For
and you'll get the same
date.
emails too. So it's I get the emails with you guys seeing what's going on.
So then right before closing, you'll get something called a closing disclosure. With the short
CD.
term is the CD, right? And you sign that, and that starts a 3-day waiting period before you can sign your actual closing documents. And the idea behind that is you look at all the numbers. That CD, that closing disclosure, is basically this is how much everything cost. This is no longer your estimate, a loan estimate that you get initially, but this is how much everything costs. Actually, like the appraisal, this is exactly how much it was. And this is exactly, you know, just everything.
So you see where the closing costs are going, what the fees are, what the loan is. It lays
and how much
everything
you're
out.
going to need to wire, you know,
Correct,
to the
at the
title
closing.
company and that kind of thing. And so you do that, and then you wait your 3 days, and then the escrow company will contact that person and either have them come in to sign. Our signings are often a hybrid or an electronic signing. You'll do a half of your closing documents electronically, then the other half with the escrow company.
With the title company.
And they can send a remote notary out to you.
They do all the
oftentimes,
time.
to come to your work. That's more prevalent than going in to actually sign.
They can send it to your home. I've signed many a times at my house alone, or Starbucks. I've clients meet Starbucks. They even do in Europe or wherever you're at. It doesn't matter.
Remote online notaries. So I've had people do that same thing.
So you can go anywhere. So at the end of the day, with the program, with the loans, going through the whole closing cost, after you're done and you sign, you get your keys, that's it. You bought a home.
Yeah.
And it started with just a phone call, pen to paper.
Pen and paper, exactly.
Pen to paper, no credit pull. From there, you can hear about all the different programs. You can talk to Dallon. You can go and see him here if you're here local in Olympia, Lacey, Washington. And I don't know how else to tell people, like, this is the best thing ever. This isn't trying to just get you to buy a home because we want to sell you a home. This is building wealth.
Really,
building generational.
This isn't salesmanship. You know, this is just a couple of guys trying to help people really fulfill their dreams. You know, of owning a home.
Oh my gosh.
And like you talked about creating generational wealth, to feeling just secure in your life and securing your families.
You can paint the wall you want. You can do the yard you want.
Well,
you can
knock
have your
out
own
that
pets.
wall, get out the sledgehammer. It's a great feeling.
Call me before you start knocking down walls. But yes, you can. But it's your home. There's no restrictions. And I'm getting a lot of calls about, I don't want HOAs. Then fine, we go find you a home that's not in the HOA neighborhood.
Sure.
No, in HOAs, you know, the fees, monthly fees to live in this neighborhood, and they have homeowner associations that tell you what you can or can't do. We have plenty of neighborhoods that don't have HOAs. So you can go around and find a home that doesn't have that. You call Dallon, we get you pre-approved, we go find you a home, we write an offer, we use his pre-approval letter. You've heard the steps, there's not much else to it. The only other question they're going to ask is at the end, where you mentioned, okay, we reviewed the CD, we looked at everything. If the closing costs cover anything, do they have to bring any money at the end to buy the home?
So say, for example, you're getting that down payment assistance loan, right?
Yes.
and the seller's paying all of your closing costs. You'll write a check for earnest money. Let's say it's $1,000.
$1,000 normal, $1,000 to $3,000 depending on the home. That's what we said, and that's in the beginning. That's it.
Yeah. So we'll call it $3,000. But the seller's paying everything, and the down payment assistance is taking care of your down payment.
Correct.
You literally get that $3,000 back.
Okay, so you do get their earnest money back.
Yeah, I'm giving you this $3,000, but I know it's coming back to me.
Yep.
You know.
So you can buy a home with literally no money.
Yeah.
Get your earnest money back that we put down in the beginning. It usually is like $1,000 to $3,000.
Right.
So I go and sign, and I get money back for buying a home.
Well, it's your money. You know? You can't get any more money than what
Come
you
on
gave, but you just get your own money back. So it's a pretty smooth deal.
So then I'm literally just buying a home, and now I'm just making payments, the same as I would pay for renting a home. Mm-hmm. So instead of renting a home now, you guys hear this, there's no money. I'm not coming to the table with any money. The only thing I had was my earnest money, maybe $1,000 up to $3,000. I get that back at the end when I sign for my home. I have a down payment assistance. I bought a home with zero money down, and all I do is make my payments.
Right.
So why are you renting? I mean, seriously, you shouldn't be renting. Now, don't get me wrong. Family has rentals. We all have rentals. So we love renters because they pay the mortgages and everything. And people sometimes don't want to take care of homes and this and that and want to rent. So I get it. So it's not slagging renters at all. But if you want to own a home and you keep saying there's no reason, or husband or wife keeps saying there's no reason, I hope you're showing this video. I really do, because it doesn't get any simpler than this.
It is easier than you think. It is possible. I recall my oldest brother encouraged me to buy a home about 5 years before I did. And I just didn't think I could.
Yep.
And I didn't even go and talk to a mortgage professional at all. And I remember the house that he was pointing out, at that time maybe cost $100,000.
Oh my goodness.
And then when I went to buy a home, whatever it was, I think 4 or 5 years later, that same house was almost $200,000.
Sounds crazy.
You know?
Yeah.
I literally just walked away from $100,000.
Yeah.
You know?
And I'm getting a lot of clients that are doing that kind of remorse thing right now, because they should have bought in 2018 or pre-COVID. I made that video, and I can hear it. They're like, wow, we should have moved with our friends up from California. The friends live up here, and they're like, we wish we would have bought then.
So we're telling you now.
Because I think it's going to get crazier. I really do. I mean, there's no way, I went over this last night, there's no way I can see the market dropping unless there's some crazy, we go to war, we have another COVID something, whatever it is. But again, after
during
war,
the COVID years,
even after COVID, even after 20%,
war, year over year. So
that's where I'm saying, even if it does drop a little bit, that's fine. At least you have your own house, your own nest, your own place. Even if it goes down, you still make the payments. 1 year, 2 years, it goes down. Guess what? It will always come back, because there's not one graph that I see that's gone like this and then kept going down. Every graph, goes down,
is exactly right.
but they always go up. Everything goes up. And then more population, less inventory. I mean, I can go on and on with every reason why these prices are going to go up in value. And if you're not buying right now, you're going to be stuck renting. And that's the worst case, because then the prices are going to be so astronomical. You can't buy, your kids can't buy. All you got to do is buy now, buy a home. We get you in a good, solid home. 2-3 years, you've built up the equity in the home. We call down, we refinance out of the loan. You do the exact same process with the 0% down, financial assistance down from Washington State. You buy again. Now you have one rental, you have one home, and you repeat in rents.
Right.
Did I miss anything?
It's really that simple.
Okay. If you have any questions,
if you've been here this long, thanks for listening to us this long. But it really is easier than you think. I can't even count how many times people have said, "Oh, just this sigh of relief, like, oh, I thought this was going to be way more complicated or way more difficult." It doesn't have to be difficult.
Especially once they get the home. They're in the home and the keys. And
what a sweet feeling.
It's amazing. So if you have questions, I'm going to put Dallon's information all on the bottom of this YouTube video, Instagram, Facebook, everything. You'll have his information. Reach out and call him. Even if you have an agent, you don't have to use me, but call Dallon, use it for lending, get pre-approved, get set up. At least you know you're in good hands with Dallon. That's the whole point of this. It's not trying to sell you. It's get in a home. That's why we're here. We take care of everybody. We're local. We take care of you guys. So call Dallon, get set up, go from there. If you do need an agent, I'm here. Call me.
And he's a great agent. You're the agent that I've sent all my family members to.
Oh, thank you. Yes, that's right. And they got some great buys.
Yeah.
Boy.
Yeah.
Even down in, I'm trying to think. The one down in Roy, is it Roy?
It was Rainier.
Rainier, thank you. The cookie place. Mm-hmm. That was a great buy.
Yeah.
Jeez.
Yeah.
I wish I would have bought that home.
Yeah.
So give us a call. other than that, if you have any questions, email, call us as well, and we'll be happy to answer anything. If you think anything's off, let us know, make the comments, and we'll go from there. So, all right, talk to you guys later.